right, it's Thursday, January 12th. It's a pre-opening SPY report about 20 minutes to go before the open. Just wanted to see how the market reacted to that CPI report. Essentially, it's a positive reaction. The market was kind of, after yesterday's green bar, actually 2 days in a row, green bar, we were kind of drifting higher. The number came out, we immediately dropped, and then we immediately recovered, and we're even higher now. So we're gapping up again for the second day. That's really, keep in mind, that's not an actionable signal. I mean, in other words, the actionable signal was really yesterday, the little 2 down, 2 up to kind of work towards those targets. Now we're just in continuation mode. So that's always presents a little exhaustion risk, but the more I'm looking at it, the more I see that on the weekly chart, what seems to be developing here is after coming down kind of to the half, we kind of rallied a little bit from all-time lows after coming down and having a pretty, a couple of weeks of sideways action. It seems like we're popping up now and wanting to target those highs. So that's way up there on the daily chart. That's taking out that big red move. We seem to be breaking out of this range, holding, and now we're targeting up here. Now, again, when you have 3 days in a row gapping up from a day trading standpoint, it's hard to know if the momentum keeps, going on. I guess we had time here. We go down, 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 down 4 days in a row, a little, and then we pause. So we're getting to a point where, yeah, I could definitely see it continuing higher, but you got to be a little bit careful of exhaustion risk. So, the way you always kind of look at it is, if it's going to break above that pre-market high, that would be a big, and continue. That's kind of the sign. Maybe we'll chop around a little bit. You might get a little bit of a pause, a little red to green move. The only way this day is going to fail and this whole scenario is going to fail at this point is, keep in mind that halfway point of yesterday's bar. If we open up here and somehow have negative opening, come all the way down to the halfway point, at that point, I'll anticipate taking out the pre-market lows. That could set up an outside bar to the downside. That could start allowing this weekly chart with 2 days to go maybe to be failing and getting a 2 down week. But until that happens, until we get some kind of obvious failure, I just kind of see this breakout of this range in here, holding and targeting kind of levels higher before we possibly head lower. So at this point, I'm just going to, with 2 days to go in the week, just really look for that weekly chart to somehow reverse to look for anything lower. Until then, I'm biased to the upside. The monthly chart, even though we're starting inside of last month, we're getting to a point where we're starting to go above the halfway point of that bar, which again, we might end up with just an inside bar here. You never know. And then we'll have to look into February to see what happens next. But it doesn't look like it, at least at the moment, that we're failing at the halfway point and testing this low. So as long as we, stayed above the open of the month, the bias has always been to the upside recently. We had maybe the key sign was this key failure day right in here 2 days ago, where kind of we had an opportunity to fail or break out of this range, and we held. That to me was a sign, first sign that we were kind of holding the break out of this range here. Now we're just continuing up. So let's play bias to the upside. It's going to be tricky with the gap up to see kind of how price opens. We're kind of coming down to the middle of the range. So let's just kind of go by the structure today, kind of mark these levels of the intraday high and low and see if we can, if we have any kind of up movement within this range, see if we can kind of get above there and hold, or if we go down, see if the key will be, again, getting below the halfway point of yesterday. If we get a start above the high of yesterday, which I assume we'll do, and then at that point we can anticipate this low being reached. But let's just, it's a little tricky in terms of do I really want to get aggressive to the long side? But I probably will. I'll look for individual stocks, because I do think now we might be heading up to those levels until proven otherwise. So let's just kind of stick with the long side today and see how structure unfolds.